And we are live. What's up, everybody? Welcome to In the Chaos. My name is Brad. The stock market is crazy and chaotic and made it my mission to help you guys own it. The stock market is an absolute shambles right now. We have a lot to go over. We also have earnings to cover. Let's not forget, we're still in the middle of earnings season, so there's a lot to cover on that. But before I do any of that, let me welcome the starting five here. We got Bruce. What's up, my man? Jacob Wheeler, Funny Pranks Gone Wrong, Philip Stroh, and Yoli Sarrias. You are the starting five. If you guys did not make the starting five, it could be because you're not subscribed or hit that notification bell. So make sure you do that, and you might just show up in the next starting five. Guys, the market is in absolute shambles, as I'd mentioned before. We got the S&P that's down 4%, which is good for 161 points. The Nasdaq, or the Dow, is down. It was down 1,200 points at one time just before it went live. It's down 3.5%. The Nasdaq was down as much as 5%, and now that started to give back a little bit of that, down 560 points. And so I decided that we need to bring in reinforcements. We got Fat Man Zoom in the house.
What's up, guys? Bro, I like your accent. Who was that? Yoli Sarias?
Yeah.
You got a little accent going.
I was trying to do my best.
Yeah, I'm looking at the stocks app on the iPhone, and everything's red, at least in my watch list. But the good news is, I was telling you when we were offline, I have over 50% cash in my account. Not on purpose. I'd like to think it was on purpose. I did free up a bunch of cash at the beginning of the year because I thought Q1 certainly was going to be a travesty. But because I got sick, I just haven't been able to spend it. So kind of a blessing in disguise. So I got a bunch of cash to play with. I don't know if anybody else does.
A little. I know. I was looking at some of the comments, and some people were looked like they were getting frustrated because they didn't have a whole lot of cash left to buy up. Man, today definitely feels like a really rough day for sure. And why is that? Why is the market reacting the way that it is? Yesterday we saw Walmart and it tanked 24%, the worst day that it had since 1987, and Target followed suit. Also the worst day since 1987 that Target's having today. You guys, maybe some of you are old enough as you're watching to remember Black Monday, but that's exactly the day that I'm talking about, where the market actually tanked 30%, over 30%, I believe, in one day. So that was a crazy time. This is also a bit of a crazy time, and so that is why those stocks have plummeted in the fashion that they did. I mean, Walmart's still tanking, and what happened? So, a couple of things. Target had earnings this morning, and by and large, they were actually pretty good. If you kind of looked at the revenue and what they were bringing in, and sales were up, they were up 4%, which is pretty darn good. Wasn't really bad in that respect. But the real problem here was profit margins and the types of inventory that they were keeping. Target, Walmart were still in the camp of consumers were coming in and buying up a lot of discretionary products. And so that was the inventory that they had online. And then they come in and consumers come in and start grabbing up non-discretionary stuff. And that's where the money was really spent. So they missed the mark on that. You look at Home Depot and Lowe's, and they actually knew what direction to go into. And so that's why those stocks, Fat Man Zoom, actually ended up doing pretty well, even though they're just getting carried down with the rest of the market. This has definitely been something very interesting, and it's pretty alarming as far as their operating income is concerned. They lost 43% compared to last year.
Discretionary is furniture. Furniture's under discretionary.
Things you don't need, like luxury items, like stuff like that.
So like non-discretionary is like toothpaste.
Yeah.
Is furniture discretionary or non-discretionary?
That's a good question. I would say it's probably non-discretionary. Like if you have an old piece of furniture, that's not really like a need.
Yeah. Because that's surprising, because I would think that would do really well. And I mean, Home Depot and Lowe's, what they offer is very different. How I go in there is very different. Yeah. And also the general consumer that goes in there is very different. I can't say it surprises me that Home Depot crushed it, because I think they will continue. Obviously, home improvement, rising retail, real estate is what I meant.
Yeah.
All that going on. Like, it's hard to get a good deal right now. And so what are you going to do? You're going to improve your property. But still, the housing market is booming. So there's a lot of work for contractors, and their business is doing well. So I mean, I think it'll, for the foreseeable future, they're going to continue to do really well.
Yeah, that's actually what I talked about on Stockwatch Sunday. I was kind of like forecasting what I thought might happen. I didn't realize that Walmart and Target were going to be this bad, but I didn't think they were going to be great.
Yeah.
And then I ended up saying that I thought that Home Depot was going to do well. And to your points, some of the points that you made were some of mine as well. But also, like, there have been a lot of people buying homes, and those people who bought homes maybe had to settle to buy a fixer upper because there wasn't many homes to be bought up.
Yeah.
And so I think that if you're buying a new home, you're not going to just sit there and let it sit, with the outdated kitchen or whatever. You're probably still out and buying up stuff at Home Depot to fix up your now new home. The other part of this too, to the point that you're making about, I think it's about half. I want to say, I'd have to, somebody correct me on that if I'm wrong. Close to half of the consumers for Home Depot are contractors. So, I mean, that's a huge part of their business.
Yeah.
And as homes continue to get built, they're going to continue to do well too.
Yeah. And also, when you look at the state of the housing market, and then particularly the buyers, it's a seller's market,
Yeah.
right? So like, buyers have to make concessions. They're going into it knowing I'm going to have to make sacrifices. So that may mean I'm going to have to get a fixer upper, like you're saying, or I might have to, most likely the budget's going down, because what you want in a perfect world, you're going to be outpriced for.
Right.
So you're going to make sacrifices. We'll see. The interesting part though, is again, you can look at that as an investor, and you can get caught up in that, and you can continue to chase stuff like that. But the reality is, there'll be a time when rates are to a point where there'll just be a time where it's a buyer's market. When it's a buyer's market, things will change. I'm not saying Home Depot will tank. I'm not saying, the beneficiaries of the housing market will tank, but I am saying that if you try to chase whatever's hot, there'll be a time when that's just not the case. One, because things are cyclical, but two, expectations year over year become too challenging. And I fear that the housing market's going to get there. And honestly, something like Home Depot, there becomes a point where it's like, you can't just continue to outpace yourself, because it's not the fact that they're the numbers are generating. It's like the rate at which they're outpacing is the big deal. So that'll be interesting. And so to me, time horizon is the most critical factor. For those people who are close to retirement, this is a very painful time. But for those of you who are not, you're in a sweet spot, and you could chase those things, or you can look at the Walmarts, the Targets, and decide, are they going anywhere? And the answer is no, they're not going anywhere. We've talked about Target with Ulta, with Apple partnerships. There's a lot of positive things on the horizon. So this could be an opportunity.
Yeah. And actually, think that as well. The overreaction. We look at Target right now. We can pull up the chart here in just a second. It opened up the day down 24%. It's down 25.5 or what have you.
Damn.
It's just absolutely crazy. Here's your daily chart on Target, and we can go back and look at the 5-minute and just see that it's just kind of been nothing but pretty much straight selling. But you look at this, and it's just one of those things that this doesn't happen to Target and Walmart. You don't see these types of drop-offs. As I'd mentioned, the worst day that they both had since 1987, 35 years. So I think that there is opportunity here. I'm not saying that today's the day you go up and buy it, but I think as things kind of like level off or settle out, we'll see some consolidation here, that maybe you start nibbling at something like Walmart, Target, because they will come back. Right now, they're facing some real issues as far as trying to figure out what the consumer's going after. It seems as if now they have a clear picture. And I got to be honest, I was wrong about Target. I thought that Target was going to do better than Walmart. When I was talking about Walmart's earnings yesterday, I thought they really dropped the ball, and it turns out that Target did actually worse. And the CEO actually owned up to it, admitted that that they kind of missed the ball here, and but also cited an additional $1 billion in additional costs from just operating costs for one of the big reasons, transports. Obviously, oil's going up, gas is at $4.50 now, and so that's just for regular unleaded, which is crazy. And so that's going to really impact these companies and all the companies that have to use transports to get their things out there.
Well, and think about this. What up, Don Fran? What's up, brother? I'm going to shout at his comment really quick. I have a comment to make about margins, but Don Fran says investors are holding up real estate a lot right now. That's why no one is seeing the effect of interest rates. When they pause, real estate is going to feel it. There's going to be a time where a lot of these factors are going to play into the housing market. Like it's just, it won't continue this way. It's impossible to continue this way. So yeah, there will be a reckoning of sorts. Shout out to Danny Alvarado for the donation.
Yes.
Target puts. Nice job.
Yeah.
10 target puts.
I appreciate it, Danny. Thanks so much, man. $50. That's amazing.
I wanted to make this point about what you said about margins. And I'm just speaking out loud. I haven't really processed this, but if your target, margins could be impacted because of inflationary pressure, right?
Yeah.
Well, I don't know the time horizon on when the inflation will go down, where that will ease, right? But it will at some point, whether it's 6 months or 6 years, at some point it'll happen. When that happens, companies like Target should really benefit because they pass on a lot of that cost, if not most of the cost of inflation and supply chain. They pass a lot of that to the customer.
Yeah.
So when it eases, usually these companies don't give it back to the consumer. You've now established this baseline and people are used to paying. And when that happens, I think companies like Target, Walmart benefit hugely because their markets now skyrocket. What say you about that?
I agree. I think that there's definitely that dynamic, but also they could have passed it on to the customer this time around. They didn't have the ability to do that because of the inventories they had, right? Like they couldn't inflate the non-discretionaries to a point to where they're making up now for the discretionary inventory they had. So like that was the big problem there. If they get this right and then they can pass it on to the consumer, then I think that they'll be in much better shape as far as that's concerned.
Again, you're looking for opportunities. Sorry for those who were in Target.
Long anyway.
Not
Danny Alvarado.
Yeah, Danny's good. But like, also, did Costco already have earnings?
No, there's going to be coming.
Yeah, if you pull it, why I make this point. So, these are opportunities where, like, one, you have essentially a misstep by a company, whether it's a miscalculation or whatever. But it sucks right now and it's short-term pain, but those are the opportunities where you're like, okay, awesome. Like, this could be a great entry point for a company. Are there going to be more red days? Certainly in this climate, yes, moving forward for Target. But these are the kind of opportunities you look at. For example, with the Tesla, if it gets impacted because Elon announces something about Twitter, that has nothing to do with Tesla. You can make an argument, but it has zero to do with Tesla. Those are great opportunities when a stock moves off of stuff that is easily remedied or really non-impactful.
Yeah.
That was just a mistake. They just miscalculated.
Yeah, 100%. I think that with Costco, it'll be interesting. And if you guys are in Costco, are you in any of these big box stores? In my opinion, depending on what your timeline is and what your strategy is, this is the absolute worst time to sell, for one.
Yeah.
Like just weather the storm. I mean, what if Costco comes out just before earnings or maybe during their earnings call and announces a special dividend? We haven't seen one in 2 years, and they've been outperforming really well from a business standpoint. Obviously, inflation's still there, but they come out with that, and the stock goes ripping up, and you missed that run. You missed it. So, it is what it is. This is obviously tough stuff, but I think, in my opinion, these are the kind of times that are just the absolute worst times to sell anything. Obviously, again, that depends on your strategy and your timeline and all that, but it is a crazy time, and the worst thing you can do is react emotionally to it.
Best day ever for Danny Alvarado. Nice.
That's awesome. Way to play both sides, my man.
Costco hot dog scandal. What's that about?
I don't know. I thought Lowe's had the monopoly on the hot dog scandal. I can't walk out of a Lowe's without getting a hot dog.
Really?
Oh man, them hot dogs are amazing.
I've never had a Lowe's hot dog.
Yeah.
I never knew they had food. I guess that makes sense. I know IKEA has food, but Costco I feel like has the best food on the spot. Target has food too, but I've never.
Target's
had
food is garbage.
I believe that. Well, the housekeeping says watch Costco crush earnings. It's interesting. I'm wondering, like, I mean, I don't discretionary versus non-discretionary. Like, if Costco got that right, I mean, I know they do well in discretionary, but I feel like the non-discretionary is where they make their,
yeah,
their bankroll.
The essentials essentially is
So maybe they could crush it.
Yeah. Lowe's doesn't have food like Costco has food. Let me be clear. They always have a hot dog stand. Most of the ones that I've been to have like hot dogs, like an independent hot dog stand.
Do you eat at IKEA? You get the Swedish meatballs?
There isn't really an IKEA up around me.
IKEA is great. I'm not their food, but it's great in general. I've never had their food, but I see those Swedish meatballs, and I'm intrigued. Someone claimed that Costco was raising their hot dogs $1 and it tanked a little, but that was a lie.
Oh, oh my God.
Like,
all right. So the market's officially closed. We get a final count here on the indices, and it looks like the S&P closed down 4%. The Dow was down 3.5%. The Nasdaq was down nearly 5% at 4 3/4. And I mean, like literally everything's red. Even oil's red, down 109.35. WTI crude is. So market's officially closed, which means that we do have some earnings coming out now. Cisco does have earnings that they're going to be reporting on, and there is some positive sentiment revolving around this. I think that we'll see what happens, but their estimated earnings per share for Cisco, was 86 cents. Estimated revenues around 13.3 billion. And then last quarter, they actually came in and did pretty well. They came in at 84 cents compared to the 81-cent estimate. They also beat on revenue there as well. Their last miss was in 2008, which is pretty crazy. The estimate was 36 and they came in at 35. So the expectation here is that it would be a real shocker if Cisco came in and missed on earnings. There's actually a lot of really positive sentiment revolving around this, an increase in orders for them. And so I think this is going to be one to certainly keep an eye on. We'll keep it, and that's really the only earnings today that I was really excited about. There is Bath and Body Works, and if you guys are interested in that, then we can take a look at it. But I didn't know how much interest was going to be generated for Bath and Body Works. I figured you guys would be more interested in Cisco. A couple of things to note from them. There was an analyst from Barclays talking about that Wall Street in general was too negative, and especially on Cisco. I mean, this is a company that's been around forever, one of the old dinosaur type tech stocks. IBM, Cisco, they kind of come hand in hand from that time, and they continue to do well. So they're expected to grow 31 to 33% for the past 3 quarters, and that's the expectation there, and we'll continue to see how that stock reacts as those earnings roll in. But just getting back to some comments here, Mike Hudson was asking, do you think Costco will be better off since most are in upper middle class neighborhoods where there is more discretionary income? That is a very interesting question. I think there could be something to that. I'm not actually. I don't know. Is Costco's more in middle to upper income classes, would you say? I don't know how factual that is, I guess.
Where I've seen them, yes. I've never realized it, but where I've seen them, they have been in,
I guess it makes sense,
nicer socioeconomic levels, areas. I will also say their model probably puts them at a higher socioeconomic level as well, because you have a paid service, like you have a subscription model.
Right.
So I think that weeds out certain economic classes. I would imagine, I don't know the statistics on it, but that subscription model certainly like a lot of people wouldn't do it because it's like, wow, why am I going to pay when I can go to the grocery store?
It makes sense. Right now, Costco is tanking. It looks like those earnings are out. There's your
Cisco.
Sorry, Cisco. Gosh, we're talking about Cisco with
Cost.
Costco. Oh gosh. All right, so the stock's down 17% after closing the day down 4.5%. Could this be the first time that they've missed in forever? What did I say was the last time they missed?
2008.
Yeah, 2008 is the last time they missed. Stock is tanking right now.
Rob Byrne on Twitter says, and Costco shits the bed.
Cisco.
Cisco.
Cisco sees revenue down. What is this? The guidance here down 1% to negative 5% year over year. The estimate was up 5%. That's a pretty decent downgrade. They see the earnings per share at 329. The expectation was 337. So they did miss on earnings for the first time since 2008. Revenue came in 12.8 billion. The estimate was at 13.34 billion. So they missed quite a bit, about $500 million in revenue that they missed on.
Damn.
That is wild. So there you have it, ladies and gentlemen. Cisco missed earnings for the first time since 2008. And that's through a pandemic. There's a pandemic in there too.
I don't mean to get off track, but what's the point of asking me about Drive Shack? Like,
well, you can ask. So what were they asking? What are you seeing? Because I have some comments about Drive Shack.
Bruce, Fat Man Zoom, stock, Drive Shack.
oh yeah.
I mean, if you're directing it at me, you're doing it for a reason.
Yeah.
Like, what's green? Like everything's getting hammered. I still like Drive Shack. I don't know what to tell you. I mean, it's going to be a long ride. We talked about this last time I was on. The blue chips are on such a discount.
Yeah.
There's no reason to look at speculative for me.
Yeah.
Speaking for myself, but I still have Drive Shack. I still feel good about it on a longer term perspective.
I still have Drive Shack as well. I did want to point out that Drive Shack was on the watch list today. Lots of insider buying going on.
Really?
Stock is up 60% from its lows just about a week ago.
Jesus, that's crazy.
So it hit $1 and now it's around $1.60 last I checked, but who knows what happened after today. But yeah.
I still want to check out a Puttery. I haven't checked them out. I couldn't tell you.
Yeah.
Puts on Cisco should be huge. Yeah, they should be up huge.
Yeah. So if you guys are just tuning in, there's about 224 of you guys hanging out. If you wouldn't mind hitting that thumbs up and subscribe and hit that notification bell as well. I do this every afternoon at 3:45 p.m. Eastern time between Monday and Thursday. And then I'm also live at 7:30 p.m. on Sundays as well for Stock Watch Sunday. If you guys want to see more reactions like this, then make sure that you're subscribing, and we'll be back at it tomorrow too. But Cisco is your big earnings report today, and it is tanking here for the first time since 2008. It missed earnings expectations. They came in at 329 per share. The expectation was at 337, and revenue came in at 12.8 billion. They're estimated at 13.34 billion was revenue there. They also lowered guidance to an operating loss of revenue is expected to come in at a loss compared to last year, a loss of 1 to 5%. The estimate was a positive 5%. I totally screwed up the wording there, but you get what I'm saying. They're expecting to come in lower on revenue year over year compared to this time last year, which is pretty crazy.
Yeah, that is wild. And surprising for a company like Cisco and a tech company. Security, right? Isn't Cisco security?
Yeah, they do a lot of things. It's a tech company in general, but they do a multitude of things.
Interesting. Was there another earnings?
No. So there was, like I said, a Bath and Body Works. If anybody was actually really,
that's
really
right,
cared
Bath
about
and Body
that one,
Works.
we can take a look at that. I think it's BBW, Big Beautiful Women.
Use BBBY.
Oh, stock is not really moving there. So, BBWI, is that the one?
BBBY.
That's Bed Bath and Beyond.
Oh, no, that's right. That's right. God, those always screw me up.
Oh, there it is. That's up like 0.25%. I don't know if it's actually moving or not. If anybody actually owns Bath and Body Works.
I mean, isn't it just the people that are like meme stock people, or are there people really interested in Bath and Body Works?
I don't think so. Was this a meme stock? I feel like Bed Bath and Beyond was more of a meme stock.
Yeah, you're right. It was.
This stock ripped though from the pandemic. $8 to 82 was the all-time high, and now it's been cut in half.
Whew. BBW, BBWI.
Yeah, BBWI. Yeah. So yeah, if you guys are just tuning in, it looks like we got a lot more viewers coming in here. So we did just cover earnings on Cisco. If I have more information on those, I will give them to you. But Cisco, for the first time since 2008, missed on earnings. They came in, missed on earnings, they missed on revenue, and then lowered their guidance to come in for revenue to come in lower year over year, where the street was expecting positive gains for as far as revenue was concerned, up to 5%, and they came in and are projecting a down 5% on revenue year over year.
Sorry, Bruce. No, you're good, Bruce. I appreciate that. I did take your comment as like there was no context, so I went to typically the negative part. But I don't know why it would be a compliment, because I guess the recent movement, but
yeah.
We know Brad's Pornhub history. Oh, BBW.
Guilty. All right. So if you guys are just tuning in, again, like I said, we covered Cisco's earnings. If you want to take part in the over-under towards the end of the show, and make sure you're putting over, under, and your favorite ticker in the chat, and I'll react to those tickers, your favorite stocks, and I'll give you my opinion as to whether or not I think your stock is overvalued or undervalued. Make sure you're putting in the chat there. I see a lot of people already putting them in. So if you guys want to take part in that and yours might show up in today's show, make sure you put over, under, and your favorite stock that you would like me to determine whether or not it's overvalued or undervalued.
Nice work, Darren Anderson. Good on you, SQQQ.
Damn, up 16%. Nicely done, sir. All right. So I was looking to see if there's any other nice little nuggets of info on Cisco. But that's pretty much the story. So that's yeah. So let me see here. So they beat expectations on earnings per share. Let me take that back. What did I read wrong here? They see. Oh, it was the guidance. Let me rephrase. So the guidance was 329 to 337. So that is why they lowered guidance. I apologize, guys. Read the wrong thing. So they actually beat earnings per share. A rare mistake on my part. But earnings per share was at 87 cents, beating expectations of 86. Revenue came in at 12.8 billion. That was correct. The miss on revenue by 13.34 billion. So they beat on earnings per share by one whole penny, and then revenue of 12.8. So the numbers that I was reading off to you before was guidance, and that's why the stock is tanking right now. So let me just reiterate. The guidance is what was down. $3.29 to $3.37 was the expectation. All those numbers are still correct. The loss of 1 to 5% on revenue year over year, and the obviously, as I'd mentioned, the current revenue, that 12.8 billion to 13 was a miss on revenue, but they came in and actually beat on earnings per share. 87 to 86 was the expectation there. So they just barely beat. So I do apologize. Redacting that statement a little bit. And Cisco did actually beat earnings. Just didn't beat on anything else. And that's why the stock's selling off. It's now down 14%. Let's take a look at that 5-minute chart. You can see that it has just been taking an absolute beating right now on those poor guidance numbers.
Appreciate the love, Melanie. Yeah, we don't get caught up in the political drama. We try to stay Switzerland here.
Yeah. Yeah.
You're not going to get us taking the bait
As much as we can.
on any of the political comments.
Nah. Okay. Keysight did have earnings. Yeah, that's right. So I saw Keysight's was that? I thought that was yesterday. They beat earnings hands down, but went down. Same with Home Depot. Oh yeah, it was yesterday.
Well, we've talked about this. I mean, just because you beat doesn't mean anything.
No.
That I think that's the biggest challenge for people is like understanding the concept that, hey, they beat, but why is the stock going down?
Right.
Or anything like you could raise expectations and the stock could go down. Like, and there could be all positive stuff across the board, and sometimes the stock will just not react like you want it to.
Yeah. Yeah. For sure. And really guidance is all that matters. I mean, a lot of people will buy the stock expecting a beat, and it's like, well, everybody knows it's coming. Everybody knows that it's going to beat most of the time, especially like when you're looking at Apple, some of the bigger ones that are like, it's very clear that they're going to beat earnings, but guidance really is the end all be all. And that's what really matters at the end of the day.
Yeah. Thanks, Marcin. Is that Marcin? I didn't pronounce that right.
I don't know either.
Marcin.
I always just say, hey, I'm going to butcher your name, but I'm going to say it anyway.
Marcin Bakun. All right. I'm going to say 3 ways. I'm going to say, and tell me if it's number 1, 2, or 3. So 1, I'm going to say Marcin. 2, Marcin. And 3,
Marcin. I don't know.
What I said.
Markin.
That's
Markin.
That's a good shot.
I'll do Markin.
So 1, 2, or 3. Are we right? John Daly's in the house. Is there a way to anticipate how much a stock will drop based on the numbers?
Unfortunately, no. These are all just based off of reactions that and really emotional trading that happens after hours on investors that look at the numbers and say, you know what, I'm out. Doesn't matter what I want to be out at, what number I'm going to get out on. I just want to be out. Especially with the environment that we're in right now. That seems to be the overall arching theme.
Yeah. And Jose says take 2 missed and they go up. Yeah. I mean, sometimes also a stock could miss and they can go up.
Yeah.
Again, you never know.
Yeah, for sure. Oh, thanks for the donation, John. John Borges says donated $5. Asks, can you please look at Melly for me? Yeah, we can take a look at that in a second. But
for $10, you would have looked at it right away.
Yeah, I just wanted to see what were some other ones. There is a couple over unders that I just wanted to make sure that I
Airbnb.
Saw. Yeah, we'll get into those in just a second. But John, sure, let's go ahead and take a look at Melly. So Mercado Libre obviously gotten absolutely murdered, down 10.25% today, just on today. But you can see that this has just been crushed, just like all the other e-commerce stocks, right? I mean, Amazon, Shopify, Etsy, these all got absolutely crushed. This stock right now, and we'll just start this with over under. This is your first over under one here. So forward PE is still at 96 times. That's higher than even Amazon at this point. It's still overvalued fundamentally.
That was 176.
Oh, sorry. Yeah, that was forward PE. Sorry. Yeah. So Amazon's current PE is at 60 times. But Mercado Libre is still overvalued. The S&P combined, the overall forward PE is at 16 times next year's earnings, right? And when we're seeing more guidance that there's a slowing in consumer spending, then Mercado Libre is probably going to continue to be a little bit rough here. Not going to sit here and tell you that you shouldn't own it or just to sell it, but I think that it could be a little bit more trouble ahead. So right now, for the moment, it's overvalued in my opinion for Mercado Libre. All right, a couple other ones that I saw. Airbnb. This is a tough one for me, guys. I am in Airbnb. I'm in it all the way up to 140, and obviously it's been really tough. So my average price on this is at 140, and I'm clearly in the red, probably along with a lot of you other guys as well. And its stock just continues to sell off. It hit another all-time low today at 107, but I'm not going to change my conviction on this. The United Airlines CEO just came out this week and raised guidance on their revenue for the year because of travel demand. They don't see it slowing anytime soon. And so I think that Airbnb still stands to be one that to own. We saw upgrades on Booking just yesterday as well. And so I think that Airbnb, while it's been really tough right now, I still think that it's undervalued. And this is one of the rare ones that has a high multiple, but I still think it should be and could be bought up because of just the trend right now that we're seeing in travel. Even though things are inflated and gas is going up and what have you, people are still going out. You got to remember, with all the restrictions, people have just kind of been waiting and dying to get out to go on vacation, and now they have the opportunity to do so. I think that they're going to do that no matter what the cost is.
Yeah, I would agree.
So that's your Airbnb. Over under on MP from Rob T. MP Materials. I feel like I know this company, but I haven't looked at it in a while. Producer Rare Earth Materials. Okay. So this area in general, I think probably does well too. I mean, you can see this is pulled back pretty much with the same type of movement that we've seen from some of the semiconductors, right? This kind of and rare earth materials largely used in semis as well. I think that MP Materials, with it trading at 45 times next year's earnings, still is a little bit overvalued. You could see that it's actually had a pretty decent move though, but there is potential for this to come back down and retest that 32.48. That being said, there is a caveat to this. Demand's still crazy. We heard our earnings from AMD, and we just got another semiconductor that report earnings today that did really well. NVIDIA, this is the future, right? These are the companies that are going to continue to do extremely well during the future. So in the future, if you're looking at this and thinking to yourself that maybe I should take a shot at it, I think that there is going to be some volatility still ahead with all of these stocks that have high multiples. But this one, in my opinion, probably still goes up just because of the ridiculous demand and the amount of supply that isn't really out there. So take that for what you will. It is overvalued still, in my opinion.
Brian Digital said, when pocketbooks get tight, vacations are the first to be ditched. I don't know if you're implying that they are, but I wouldn't say necessarily right now that pocketbooks are tight.
No, I mean, and really the consumer has a lot of cash on the sidelines still. Like, we're not there yet. We might be, especially if inflation continues to be a problem, but we're just not there yet. And I definitely hear what he's saying. In a normal situation, yes, that would be it. Like, if we didn't have a pandemic where everybody's locked in their homes for the last essentially 18 months, 2 years, whatever, that would be a problem. But I don't know if that is right now. And I guess it's me being speculative, but it seems to me, just based off the trends that we're seeing from all of the CEOs related to travel, that it's not slowing down anytime soon.
Yeah.
I like this one. Over under on MGM from Philip Stroh. MGM is a very interesting one. This one has been one of the better performers in the space. Obviously, it's red on the year. Everything is. But when it comes down to the stocks that have been the least volatile and have fallen the least, MGM is that stock. It's literally been the best performing stock in the space as far as casinos and gambling is concerned. They have exposure to Macau. We're going to start to see them lift all their restrictions by June 1st. So we have been told. We will see about that. But nevertheless, this is going to help MGM for sure. This is trading at 54 times next year's earnings. It's trading at 10 times right now. I think that there's definitely a case you can make for it to be overvalued. But given the fact that we're still waiting for Macau to really truly come back online, I'll be willing to go on a limb and say this is still undervalued.
In the same space, I just wanted to bring something up about Penn that people may not know. $1 million worth of game is one of the top podcasts for Barstool.
Yeah.
And it targets the urban market, which none of the big podcast companies, if you look at the Spotify, you look at a Barstool, like Barstool has the top podcast, which is $1 million worth of game. Their contract is about to be negotiated. That's going to be what I think is the most important factor in the near future for them. So keep an eye on that. It looks like they want to get re-signed. They're probably going to get an offer from Spotify that Barstool can't match, but it seems like they're also very loyal to Barstool and they really like their freedom. So they may take less. If they stay, if they don't stay, that's a huge hit. But if they stay, watch out, because you may see Barstool $1 million worth of games spin off and create like an urban market Barstool, which hasn't really entered in the conversation. You won't hear it on any of the Penn National, but Dave Portnoy went on $1 million worth of game and talked about that. And it's a huge opportunity that no Spotify, none of those big companies have capitalized on. So mark my words, if they lock that in, it's huge. It's going to be huge for the future of Barstool.
Yeah, absolutely. I mean, especially when you consider like Call Her Daddy left for $60 million from Spotify. I'd imagine some of these other ones, especially Spotify, probably is running out of cash to put into some of these bigger podcasts.
Yeah, maybe. Too. Yeah. I mean, Call Her Daddy, she kind of got everything handed to her. She got really lucky.
Yeah.
And I think these guys are just built different. And I mean, the main or the co-host, he was in jail for 20 years. So their perspective is very totally different.
Yeah.
So I think that that's the one thing with Barstool and Dave Portnoy is like not only the freedom, but I think they realize that like a lot of executives would have looked at them and been afraid and probably were afraid of them.
Yeah.
And I think loyalty is more important to them. Whereas somebody like Alex Cooper, Call Her Daddy, she's awesome, but she was pursued. And I think it came like when it comes really easy, I don't know how much loyalty is as big of a deal.
That's a fair point. Yeah, I would agree with that.
But they didn't come that far off. I think they offered like 50 million. It came out like,
oh, really?
Yeah. Like I thought Barstool offered a lot less, but it wasn't. I mean, 10 million is a lot. Don't get me wrong, but it wasn't like that far off.
Yeah. Yeah.
They just stopped. They were like, we're not going to, I mean, I'm sure Spotify would have increased it, but they're like, we're not going to continue.
It's just mind blowing where podcasting's going, man. The amount of money they're pouring into these people is absolutely insane.
Yeah, exactly.
Okay. So over under on Coke. Interesting. So Coke, obviously it's grandpa's stock. It had a crazy down day today by Coke standards. It was down 7%. Had recent highs of 67.20, and their earnings weren't necessarily, I wouldn't say mind blowing, but they were okay. Looking at this right now, we're looking at it's pretty high multiple still compared to everything else. It's at 24 times next year's earnings. Just closed below today for the first time since below the 50-day moving average for the first time since March. So it fell back below there. I think that there's a lot more room that this could potentially come down to. Let's look at $57 per share. Right now, I think it's a little bit overvalued until it starts to reach down to that level, maybe around 57.
So would you say you're bullish on Coke or bearish on Coke?
I'm bearish short term, but I would still like this 12 months out. So depending on your timeline.
And how do you feel about Coca-Cola?
Got him. All right. So there is Coke. Oh, trading stocks. What's up, my man? Good to see you. All right. Let me see if there is one more. Oh, over under on Roblox. Very interesting one too. These are some good ones that you guys brought to the table today. Roblox has been obviously one that actually has been terrible, right? Highs of $141, came down to $21 a share, and then actually did really well on earnings and had a fantastic forecast. And it's been going up ever since. One of the very few stocks today, in fact, that was green. It was up 2% on the day. Looking at this, though, this is still trading at a loss. And so the market does just not want anything to do with that. But I think that we're at a point now with Roblox that it's so bad, it's good.
Yeah.
So I think that this, while it is trading for a loss or it is operating for a loss, and that investors aren't really fond of these types of stocks right now in this market, I still think this is undervalued. This has come down to a point to where it's gotten to kind of, like I said, it's so bad it's good. And I think that you could take a shot at it. Risk reward wise, it's good in my opinion.
I agree with you, especially when you see recently public stock, which I would put there in recently public within the year.
Yeah.
That the fundamentals look so good.
Yeah.
In that case, right? And all fundamentals look good,
right?
But typically you don't see it with a tech company like Roblox, who's recently public. You don't normally see that type of situation.
Yeah.
So I would agree.
Tons of growth potential here. Turk Boy, sure, why not? USAK. Thanks for the donation. Let's see here. USA Truck, is this a transport? Provide solutions diverse customer base throughout the United States and into portions of Canada. Yeah, it looks like a transportations industrials. I like the industry by itself. So I like anything right now that's in the transports. They're the ones that have ridiculous pricing power right now, and businesses have to pay it. Otherwise, their customers and consumers don't get the products. So I can't believe that this is trading at 3.5 times next year's earnings. This is absolutely insane. This is undervalued. I like the stock here. I don't know much about the company, but just the industry itself, and given how much it's come down, is crazy to me. So I think that yes, USAK is undervalued, but even in this space, look for a GXO Logistics as well. I believe that's only trading like 5 times. That's 18 times. Sorry. That one is trading at a pretty decent multiple, but still, look how much this has come down. I think that this one, in my opinion, all the transports, Union Pacific, they're all going to continue to do well. They'll bounce back, and I would imagine their next earnings, they're probably going to talk about a lot of that.
Yeah.
Okay, guys, that's going to do it for me today. Really good stuff. Look, obviously it's been a really rough day, but most of you responded to the poll, and good on most of you who said that you were just going to not look at your portfolio and chill. That's probably the right decision. Those of you who got naked and run outside screaming, hope you don't get arrested. But tomorrow's earnings, I believe there's going to be ones worth taking a look at. Can't remember now. Let me double check what we got on tomorrow's doc here. We got Kohl's that is pre-market, Lightspeed, BJ's. BJ's reacted pretty similar to what Target and Walmart did, just based off of what they were reporting. So that'll be very interesting. But some good ones tomorrow afternoon. We got Applied Materials, Palo Alto. Those are going to be the big ones that I'll be reacting to. And then I'll give you my thoughts on John Deere Friday morning. I really like the stock, and I think that's going to do well too. So just make sure you guys are subscribed and hit the notification bell for that. And we appreciate you. It's good to have you on today, man.
You like BJ's?
I do like BJ's.
Bye. See you guys.
See ya.
Good seeing you guys.